Well, Jerome Powell did it. He finally came out and spoke, and we got the summary of economic projections. I'm going to provide some important insight into what we're looking at and how we should view it going forward from here, especially where it impacts the market. I would like to provide the technicals and that commentary for you. And if you guys would like to see more of those products, services, including my trades, to see how I'm playing this market, and also the live stream trading, the day trading with the 0 DTEs, there's a link down in the description through the Discord or for the Discord where you use code word doctor. You get 50% off when you sign up for the earner tier for that first month. I'll tell you more about that later. In the meantime, let's get into that SCP and talk about what we really see in this and what we should be digging into. All right, so let's look at the median numbers here first. So first of all, GDP coming down to 1.4%. We expected some softening there. I don't think the market was really bothered by that. 4.5%, also not huge for unemployment rate, but that is a key detail. I absolutely want to pick into the unemployment rate and talk about what we could potentially see there, because it is pretty darn important to pay attention to that. I'm going to circle that better. Oh yeah, look at that. PCE inflation. Here's two things that aren't very good for the market. Inflation going up. And one of the things that Powell had said, I don't know why I did that. One of the things that Powell had said when he talked about this inflation is he said we could potentially see that inflation coming because it has to be passed on somewhere. We could most likely see it being passed on to the consumer. We'll watch and see if that happens. It really puts a lot of pressure on the coming months on the inflation reports. And one of the big things that was not liked at all was about these rates, the fact that unchanged for the end of 2025 for where they see it. So same amount of rate cuts, about 2 rate cuts, 25 basis point rate cuts between now and then one fewer for the next 2 years than what we were expecting. So they're expecting a little bit more inflation to happen for them to come back down to that target. I think that they're really just giving themselves a cushion, and then we absolutely need to watch and see what's going on with tariffs as that develops, and also what's going on with geopolitical tensions. That was also brought up, talking about energy prices as well. So for Powell, when he came out and commented on this, and I have some other details that I want to share with you on this, he actually came out and was pretty darn bullish, because when we look at that, there's not a lot of major concerns that are there. There's some near-term concerns, but that should be washed away. He kept on talking about economic strength. Really, inflation was the big thing that he said, we had to wait and see because we feel like that could come along. It could be a one-off inflation number before settling back down again. We're going to have to see if that really is the case. I think July is going to be a huge month. Plus, let us not forget that the market is closed tomorrow. And then on Friday, it is an options day for the monthly options and the quarterly options. It's actually a triple witching day. We should see some pretty darn high volatility. And we also need to talk about how to set up for Q3, because we have a lot of our favorite plays that are actually near all-time highs, including the market, which is near all-time highs. So we could see a little bit further of a push up. Maybe it sends us off to those new all-time highs. And like I said, I have the technicals to share with you for this. We could see that push up to new all-time highs before getting quickly flipped around in July or August, maybe even as late as September. September usually being one of the worst trading months that we have throughout the entire year. So about this summary of economic projections, then one of the things I wanted to share with you as we look at this unemployment rate relates to what we have for the SOM rule. And for the SOM rule, what we have to look at the previous, out of the last 3 months, unemployment rate that we have, the average of the last 3 months. And we've actually been running pretty consistently at between 4 and 4.2 for the entire year. But I will tell you that we are right around just south of 4.1 as that low, especially as we look from December of last year leading up to December of this coming year. And so if we're just shy of that 4.1, if we're closing around 4.5 for the year, as the Fed expects, as their median projection is, if that really is the case, that puts us darn close to that SOM rule, depending on when we start to see that softening in the employment data. For instance, if we see 4.6 or higher over the last 3 months, that does trigger the SOM rule, and it talks us then about 2026 in recession. But once again, that's more of a bullish thing right now because we're further away from that SOM rule triggering, and so we're further away from that narrative of recession. So right now, we do have a lot of reasons to be hopeful for that strength, and we did get pushed down to support levels today. I think now's an appropriate time to get into the charts for this. So we're going to toss the charts up here. And we'll kick things off talking about QQQ. And I said, we're still above the 13. I talked about that going back here to Friday of last week. We revisited it yesterday and then once again today before bouncing back up. Now, dropping down to the hourly chart, let me reset the view, because what I want you to see as I put up these two rays is that we are narrowing down, and right around that 530 for QQQ is what we keep on dancing around. We were dancing around back here before we ripped up, and now we're sort of bouncing around. Should we go up to all-time high? Should we not go? Geopolitical tensions, inflationary risk. The Fed already came out and spoke, so we had that. And then we also have those labor market reports coming out. The eyes are absolutely going to be on those, watching for any sign of increase. 4.3, probably not so bad. But if we jump more than 1.1%, if we quickly go up to 4.4, for example, from 1 month to the next, to go from 4.2 up to 4.4, the market's probably going to be pretty darn rattled on that one because of what I said earlier about that last 3 months average. If we see October, November, December go 4.6 or higher each, that's where we could see that, or what averages out to that 4.6%, because the lowest throughout that entire year then will be that 4.1. Now, like I said, it's down the road, and we currently don't have evidence of that, which gives the market a little bit more ability, a little bit more leeway to rally on in the meantime. So when we look at this chart, we just took that heavy bounce off of support. We're down below the 50, the 13, and the 5 on this hourly chart. However, when you look at the daily chart, we have the 5 rounding down on the 13, and I'll give a little bit more commentary on that in just a moment here. Let me take down those rays. There we go, because we really want to focus on the moving averages here. So 5-period moving average. What candle does that take us back to? We'll click here, and we'll go back 5. There we go. 5 bars takes us all the way back to this close. Well, as we get that next one, we're going to be over at this close, and then it's really important to see where that next one is. So if Friday is our next trading day happens to be a day where we're trading down below the 13, the 5 is also going to be pushed down as well, which could be further near-term bearish pressure. And those rays that I showed you, if we lose the support on this ray, and especially if we retest that support as resistance and get rejected, we could potentially sell down and soften a little bit more. And with us leaning in towards that third quarter, well, that's also something that we want to pay attention to, because we're going to have institutions looking to show very strong numbers for their quarter, which could lean into that push up in the near term, especially to end June strongly and then give people some hope during July and then smush it right down. I could see that taking place, especially with the whole tariff catalyst coming up, with what we have happening for pretty much the entire world except for China. China, I think, pushed out to August 14th, I think is that day. So we have some pretty important catalysts still coming our way. We have inflation catalysts, and we also have labor market catalysts along with those tariff catalysts. So hopefully we hold that 13 and then we bounce off of here. I still think that it's a wrong time to go short on the market, to go bearish on the market, according to the technicals that we see. And when I put up SPY, once again, much the same thing, Matt. We found that support today. We still have either direction. And if we look at the 5-period moving average for this one, it still takes us back to this red candle that we have over here. That low is going to fall off, and it really makes a huge difference. If we have just a wildly wicked uptrend day, that will help out that 5-period to curve away from that 13-period moving average, and that could help us out in further bullishness. The RSI is absolutely perfect right now to remain bullish for a daily basis here. If instead we drop down lower than that, that can push down the 5 quickly, and then we start to sell off a little bit more. For IWM, had a kind of a wicked day. Wick candle, is that a candle chart pun? I don't know. In any case, we made it down to the 20-day on this one. That's a simple moving average. If I tuck that away and bring out the EMAs, we actually traded back up above the 13 period, which is good. That absolutely does help us out. Now, mind you, if we go 5 candles back on this one, 1, 2, 3, 4, 5, we're all the way up here. That candle is going to fall off. That's going to push that 5-period EMA downward. So it really matters, especially for these Russell 2000 small caps, what exactly we see, because 5 crossing down to the 13 is a bearish sign, especially if the candles are dangling down below them. Crypto, in terms of risk assets, didn't have too great of a time either. It's really looking for that easy monetary policy, and Jerome Powell just keeps on telling us that we're not going to get it yet. And what the heck? Come on, man. You can do it. I know you can. Really, we need those inflationary pressures to go away. We need geopolitical tensions to subside so energy prices can cool down. And then we also need to have the whole tariff situation kind of get deals made, get the grease back into the gears, and really start things running. That can really help us out with those risk assets. I like cheap deals though. I'll tell you, I've been building up my cash pile for a while here, and I still have my long positions. I haven't touched those, but through the Discord, you guys can check out the trades that I do to build that alpha in my portfolio and what I do to chase down financial freedom and what the other panel experts over there do as well. And you can also see what the community is doing. You can also take advantage of the bread bot that's there that can tell you when the massive swings are coming up or down for your favorite plays, the AI tools, the advanced charting tools, the products, services, the people. It really is an entire ecosystem dedicated to helping you in your pursuit of financial freedom. It's definitely worth checking out, especially for that first month, which I think you're going to end up that you love what you see and that, like so many others have in that community, and you're probably going to end up staying for a while. Code word doctor gets you 50% off that first month. And if you want to learn more about technical analysis, trading using technicals, or trading options, which I absolutely love trading options up or down. You get to play both sides of the market. And man, oh man, does it really, really have an opportunity to outperform. There's coursework for that down in the description through Stockmo Academy. It's a personal friend of mine who happens to be just a whiz at finance. Finance being one of my passions, and then both of us being career educators. I have vetted these courses myself. I've gone through these courses, and I can tell you there's none better than what you'll find there. Code word doctor for that one-time fee for lifetime access on those courses, whether it's options or trading using technical analysis. The bundle plus the code word of doctor is going to get you maximum savings on that. Guys, let's go back to the charts here. We'll check out TMF and we'll talk about what exactly happened today with it, why it didn't do so hot, and we'll also talk about Bitcoin. So TMF, why do we see this sort of rip downward? Well, what we saw from today is that further inflation is expected, and long-term treasuries do not do well with higher inflation. So if you see inflation up, one thing that you can think of is treasuries down. And also, if you see that the US GDP isn't doing so hot, so economic weakening, even though that's usually a good thing with the debt crisis that we find ourselves in, that puts further pressure on those long-dated treasuries. So it started off as a very good day for TMF, and I expected some upward movement. The SEP just came out and it took the wind out of its sails for right now, which might build up to that next opportunity. We're going to have to watch and see what happens with it. Now for Bitcoin, it really has to keep a hold of this 104,324, which is this magenta line that's coming across the screen right here. And so far it has. Also finding support at this 50 EMA. It is down below the 5 and 13. So far showing a little bit of bearishness. Breaking down below the 50 is going to be absolutely enormous to watch. Now, much like I did with the 5-period moving average, let's look at the 13-period moving average that takes us all the way back to this candle that's over here where we had that nice low close. That's going to be pushed up higher. That yellow 13 moving average is going to be pushed up even higher and away from those candles there. As soon as that falls off and we have this one to pay attention to, and our prices, man, they're right near that same value for what we have on this candle over here. So we might get a little bit of a push up on that with the EMAs. It's going to have further weighting towards this near end that we have right here. So it's going to be really impactful when we start losing these candles. So it's actually the next several days are really highly critical and important for Bitcoin, especially because it finds itself in this same sort of sideways trading, kind of narrowing, the tops coming down, the bottoms coming up. We need to watch what sort of trend line breaking we get for Bitcoin. That's going to tell us a lot about what to expect in the near future on this. So what's the overall take then from the SEP? Well, it looks a little bit like stagflation, but not necessarily. We don't have low enough GDP and high enough inflation. And also the unemployment side of things is the final piece of that recipe to put us in that area for that. We really just, like I said before this, that after the Fed meeting, that the pressure goes on to the economic reports that we get. It goes on to the labor market, on the jobs data that we get at the beginning of July. They now have the onus to continue to show strength. It also goes on to the personal consumption expenditures with the personal income and outlays to keep on showing that we have increase in wages. It has to show us good savings. It has to show us strong spending from the consumer. That's really going to weigh into the GDP that we have. And then we also have to watch for that unemployment rate, non-farm payrolls, the JOLTS numbers that we get. There's just a lot of pressure still to go. And I still think that we have the opportunity to still reach those all-time highs despite that pressure, because I don't know that we see that rattling yet. But I will say as we get into those fall type months, maybe August, just before we get into that first fall month of September, August, September, October, those 3 months are going to be absolutely critical for us And really, like I said before about showing that outperformance for Q3 in terms of institutions wanting to put out strong numbers, we have to look around the market and see. And that's what I'm going to do next is I'm going to plan out where I see things going for Q3 and what stocks, what plays are going to be absolutely the best. And if you guys want to see more of that, like I said before, links in the description for the Discord. And if you want to learn more about how to impactfully use options and technicals, check out that coursework through Stockmo Academy. Code word doctor for that as well. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you next video.